It's been a big week with record highs in the United States, company AGMs in full swing, serious allegations raised about Rio and Crown, and the market hitting 5,900. The good news, according to our next guest, is that the local market will not have a big bad day in October. To explain why, as well as those for some of the broker upgrades and downgrades, I'm joined by the editor of FNArena, Rudy Van Dyke. Rudy, welcome to the program.
It's a pleasure to be here, Paul.
Now, for a guy who's normally I'd described in the glass half empty category, that's a pretty big call to say we won't have a big down day in October. So here you go. Here's your chance. Tell me why not.
I take offence with that description of myself, but it's only because I have to sit with perma bulls like Peter Switzer every once in a while that I have to temper them a little bit. And but to get back to your question, I did send in a beautiful chart, I believe, and I hope that might be ready. That might illustrate just what I'm talking about.
Well, let's see if we can get that chart up now.
From the moment I saw that chart, I thought, like, well, that explains it completely. I've already shared this one with readers at FNArena, of course.
That's coming up on the screen now, Rudy. So take us through the chart.
Well, what people should focus on is that bluish line that rather stands out, and on the very end of the chart, it really spikes higher. That is the year 2017, and what that blue line indicates, that is the cash that is being well, that's the money that's in cash with super funds. And you see there's three spikes over the past decades. One was 2008. Now we know why that one is. There's a spike in 2011, 2012. Well, we had a lot of European problems in those days. And you see that in 2016 it moved up, but then in 2017 it just really has risen a lot. And that indicates that, and we've seen that in the market. I mean, the volumes have been relatively low this year, and the market hasn't gone anywhere. It's between May and September, and all of a sudden we come at the end of September, and this is where the super funds are being left with I mean, not as much cash as in the past decade. So my suspicion is that they have all been waiting for the ever unpredictable September, and thinking that September would bring weakness so they could put money in the markets. Now that didn't happen, and then they just decided in October, let's put some money in the market, because the third quarter is traditionally a good quarter in Australia. The past 7 years have 100% shown that the Australian market has a positive return in the final 3 months, and none of those fund managers, of course, they want to end the year with so much sitting in cash. And I think there's well, one of the observations to make, and you see that every day in the market now, this market doesn't seem to be able to fall. And if it falls, there's plenty of cash on the sidelines that's moving into these shares.
So your thesis, Rudy, is the market or the super funds are so cashed up that all waiting to buy, all waiting for the big dip that people have been, and the bearish October and September, which hasn't happened, so that if it does do, they'll all jump in there and buy. So that's the thesis?
No, I think they started buying because they're now convinced that they started buying now because that weak September hasn't happened, and then they all decided as a group, we're not going to wait for more weakness, we're just going to buy, and this can easily run into the new year.
Okay, well, Rudy, I'm going to write you down. No big down day in October. You're down in my little diary, so I think I want to move on from that. So that's called pressure. Okay, let's come to some broker upgrades and downgrades. Just look at a couple of things. The one that really stood out for me, I don't know whether you've ever seen this, was that Citi changed tack on Bellamy's. They went from a sell to a buy, and they changed their valuation from $7.90 to $14.40. Yes. Have you ever seen such a turnaround?
Almost double. Yes,
almost double.
I must say I have seen similar turnarounds, but they do not often happen in industrial stocks. I mean, they can sometimes happen in resources stocks for obvious reasons, because the leverage is much higher. And obviously, at face value, it looks completely ridiculous. I mean, you go 2 steps from sell to buy, and you almost double your valuation. But Probably the best way to describe this is that previously Citi was of the view, and for a while rightfully so, that the problems were too big to ignore, and they obviously put some very conservative numbers through their modeling, and that generated a valuation of less than $8 for a stock that was trading higher, so there was a sell rating. Now they've decided that the turnaround has come much quicker. Plus, momentum is now creeping back in the business, so now they've put some more optimistic numbers in the modeling, and the valuation pretty much doubles. So yes, this is the fallacy of mathematics and of modeling, of course. But I mean, the difference, and it also shows you as an investor what the leverage can be in some of those smaller industrial stocks. I mean, the difference between being very conservative and more optimistic can easily mean 50% more in valuation.
Okay, quickly, Rudy.
100% more.
Yep, I can't say more. Other upgrades or downgrades that took your fancy?
Well, I did see that both BHP and Rio have received downgrades recently, and actually quite some mining companies have been receiving downgrades, which probably indicates that this whole theory about synchronized global growth, hence buy commodity stocks, is not as simple as it may seem at face value.
Okay. All right, and then I want to ask you about any fallen angels that you've got your eye on.
Well, yes, but the market is absolutely so quick in jumping on them. I mean, I had my eye on GUD holdings this week.
Sorry, just GUD, which is the
GUD, yes.
Yep.
Which is basically going through a transformation, and investors have been very quick in picking that one up. GUD is basically saying goodbye, but no more to its consumer-oriented businesses.
Just take me back one step, Rudy. Just tell me what GUD does, just for the benefit of listeners.
That's what I was about to explain, Paul. It's basically transforming itself now. It used to be a conglomerate. Which used to compete with the likes of Breville Group and the likes, and it's now basically saying goodbye to those operations, and it's building a automotive business. So it gets into the category of a Babcor and a super retail, that type of operations. So it does. Things to repair cars and stuff like that. So that transformation is going to bring a lot of rewards to investors if it's successful. But for some reason, the shares spiked very high mid-year and then basically sold off more than 20%. And I thought, like, this is getting quite interesting because I was looking to get on board, and then one of the brokers upgraded the stock, and it rallied like there's no tomorrow. Okay. So unfortunately, I will have to wait for another day. Okay,
give me another one. You've got another one that takes your fancy.
Well, another one would be Domino's Pizza.
As a fallen angel.
And definitely, and that has done the same basically. I mean, it dipped very briefly below $40, and I looked yesterday or so, and it's 50 or 49 basically. So at this level, you want to be a little bit more cautious, I would say. But it's remarkable how quickly the market picks up these stocks again from the moment they stop falling.
Okay. And then finally, Rudy, any sort of high yielders? I mean, we're always buying stocks for yield can be fraught with danger, but sometimes in the small and mid caps there are stocks that pay a pretty consistent yield and don't get a lot of attention. So any companies that come to mind in that category?
Yes, I own one, and that has not performed so far. It's called Viva Energy. It's a REIT. It actually owns petrol stations, Shell. The share price has been rather weak, although it is perking up this month when everyone's buying, and it still offers a very healthy yield, and it could well be an alternative for people who, for example, are selling their Telstras these days full of disgust by the capital losses they're enduring there. I actually think that Viva Energy is heavily underappreciated, and probably because it's a small cap, but at some stage it will come under investors' radar because the yield is actually quite good, and it will only increase in the years to come.
Okay, and the stock code there, Rudy?
It's a VVR.
VVR. Okay. Well, look, thank you for that. Of course, look, we don't know about your personal circumstances, so whether that's appropriate, don't take that as advice, but at least you've got some insights on what Rudy Philippek van Dijk, the editor of FNArena, is looking at. And we've got you down for no big down day in October, Rudy, so I'm going to really mark that in your cards. As always, thanks for joining us on Switzer.
You can keep me on that one, by the way.
I will do. Okay.
Cheers.
After the break, we'll put the spotlight on leadership with Helen Trinker, the editor of Deal magazine. Stay with us.